All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about SCHD, the good, the bad, the ugly, everything around SCHD, because SCHD is down about 3.53%. Something's not exactly right here. What's going on? Because we have the S&P 500, which is up 5.5% over the past 6 months. We also have YMAX, although it says down 19%. We're going to get into this and touch on this, but it pays a 63% dividend, so we're actually up and positive on YMAX. So why are we down so much in SCHD? Today, what I've done is I've downloaded all the holdings of SCHD. As well, I have their company website up. So what we're going to do together is we're going to dive into SCHD a little bit, look at some opportunities where I believe there's some beaten down stocks that are potentially great businesses at great price points where you could either decide to buy those or you could buy directly in SCHD. This is all about the opportunity potential within SCHD, as it's something that I have in my goal tracker here and I'm potentially looking to buy in the future. So we're wondering, why is it down? So that's what we're going to dissect in this video. And before we get into that, wow, 8,373 subscribers, 184 subscribers in the past 28 days. That is awesome. Every time I check my subscriber count, I'm over the moon. I want to say thank you very much for sticking around and joining our channel and commenting and doing your very best. As well, I need to give a shout out to my own Honorable Investing website. The link will be in the description of this video. If you hit more down here, you will see the link, which will take you to a goal tracker template, which you see right here. This is where I track all of my major positions, and it tells me when to buy. For example, HP, Helmerich and Payne, if I refresh my page here, Helmerich and Payne is actually close to my buy price at $15. And the reason why I have that is because it's easily displayed right here. When Helmerich and Payne gets to $15, I still believe it's a great company. I will do my reanalysis, and if everything checks out, I will buy more shares of Helmerich and Payne. That's how this tracker works. Get it down below if you are interested. Link in the description. As well, I need to give a shout out to our channel and our investing portfolio because we reached the big 70,000, a new kind of decade, so to speak. So I'm very grateful for that, and as well very excited as we continue to receive a lot in terms of cash flow and dividends, and as well our portfolio trends up over time, which is what we love to see. So we're making big moves, which is great. I'm super happy. Nonetheless, what's also kind of great, depending on how you look at it, is the opportunity presented within SCHD. So the reason why we're talking about it today is because it's down roughly 3.5% when we've seen the market trend up pretty substantially over the past little while. Now, if we're talking about the entire market uptrend, it's about 25% down from a low here of about 48.35, something like that, all the way up to where it currently stands at about $6,200. SCHD in the same time frame has gone from a we'll say $24 stock up to about a $26.50 stock. It's maybe about a 7% return. It has significantly underperformed the S&P 500 index. And of course it pays a dividend, but this dividend is not big enough. It's not like YieldMax, another fund that we're going to compare it to, because although YieldMax is down almost 20%, pays a 63% dividend. That's been pretty consistent throughout the year. You divide that by 2 because this is the 6-month calendar. You're getting roughly about a 32% dividend added to this, basically saying that YMAX outperforming SCHD, probably producing about a 10% return, whereas SCHD producing a negative return with this dividend. So why is this happening? Well, I've looked into a lot of the underlying stocks, and I do see some positives. I see Texas Instruments, which is great. I see Cisco, which is cool. But there's a lot of underlying stocks here, which I recognize these names because they're in a portfolio of mine, which tracks. I've been doing some research on the S&P 500, looking for some undervalued companies, and a lot of them are found within SCHD. What am I talking about? I'm talking about Lockheed Martin, for example, which is, if we go here, a lot of these underlying values, you have the percents here. These make up almost about 15% of SCHD's total value. Lockheed Martin, for example, if we look at our first one on the list, over the past year, it's a fairly well-trending company. Okay, it pays a pretty reliable dividend at about 2.8%. It's got a lot of room for the forward dividend, but that's not exactly what we're talking about today. We're just looking solely at the share price appreciation. A lot of the underlying companies within SCHD should appreciate over time. Lockheed Martin as well. But you'll see here, it's kind of in a bit of a rut. It's trended flat over the past few years. And that's obviously contributed to SCHD trending flat over the last little while. But it's not the only stock. MERK and Co. This is another one that I was potentially looking at when I was looking at all the S&P 500 ETFs, S&P 500 underlying stocks. Pardon me. MERK & Co. down about 36% over the past year, and they're not a company that has these big discounts, quote unquote, all that often. You can see they trend up over the long term, but in the recent year, they've downtrended quite a bit, and they're presenting a good opportunity. Now, their company does have some headwinds, and I advise you to kind of look into this. Their forward dividends sitting pretty good with their current earnings per share, but that could all potentially change. This MERK & Co., MRK, is another company that has hindered the performance of SCHD over the short term. Now, one thing to think about is if you do believe in these underlying companies, then you should be buying SCHD if you think it's going to produce a good return. If you think they're going to be better off in the future, a higher share price, then you should obviously look to purchase SCHD. Another one, down, T. Rowe Price. T. Rowe Price has been beaten down and stayed down over the past few years. This is another major holding within SCHD, making up, if we go here, T. Rowe Price, okay, major holding, absolutely false. 0.87%, less than 1%, but nonetheless, it's still a hit to SCHD's total portfolio. We get into more, now these will be more of the major holders in SCHD. We got Verizon, Coca-Cola, HD. Coca-Cola, I put it here, but Coca-Cola is actually doing pretty good. So if we look at it, Coca-Cola's been up over the past year about 11%. That is not hindered on SCHD, but what has is potentially Verizon a little bit with this downtrend of roughly about 20% if we look here over the past 5 years, and it's stayed down. But nonetheless, these are still great long-term companies. Of course, each one is going to have its quirks and it's going to have its features, but I'm just here to kind of show you some of the underlying companies which have discounts. They might, of course, have headwinds as mentioned, but they could be great long-term buys at these prices. Another company, Home Depot, at a share price of $430 earlier in the year, they are probably down about 10 to 15%, as you can see right here. So this is another one where Home Depot has been hit pretty good over the last little while. And this is, of course, while the overall market has been in an uptrend. So those are some underlying stocks of SCHD that have been hit pretty hard, but I do think are contributing to the downside that we see in SCHD. But nonetheless, SCHD, I think, is a fantastic buy for the overall future. And I do think that with these stocks being beaten down, I do think a lot of them are going to bounce back and are going to be a higher share price than they are today and produce the same steadily increasing dividends that they have been producing. So I do think they will be a long-term asset to SCHD. And that's why I have SCHD on my long-term dividend portfolio. Of course, to keep you guys informed, I am receiving a lot of cash flow, but I'm not buying any stock with it. I'm looking to take out that money. But unfortunately, the Canadian-American exchange rate is not that amazing right now, so I'm holding onto that money in cash. When this exchange rate gets a little higher, maybe about the 140 marker, then I will convert and take out that cash so I can buy other investments, not only my stocks. I will obviously keep you guys posted, but this was just a little video on SCHD and where I believe the opportunity presents itself within the underlying stock. If you go to their website, you can download, for example, all of their holdings by going to their top holdings and clicking on this button, export all holdings, and you can see for yourself, and you guys can also check out their underlying stocks and which ones you believe have value. This is what I wanted to show you today, but you can continue on with your research and continue on with your investing. I really hope you guys did enjoy this video. Just to be quick, we're up to 8,373 subscribers. Please do click down below and get your honorable investing goal tracker. As you see right here, that'll help you to invest and keep track of your goals and buy great businesses at great prices. Of course, I'm always here. Please leave me a comment and let me know if you guys want me to do any more videos like this or anything in the future. I will sure to get back to you. I'll be sure to get back to you. All right, please do take care, and I hope to see you guys in the next video.